Now let's begin the, and I'll be sharing with you guys how to trade the range market. Now, generally my webinar series would be five elements. First is the updates on the price action guru portal. Second is the opportunities for that week, where this is just not a learning platform. Every week I'll be giving you 2 entries and I'll be discussing what was the result last week. So this way, a lot of our participants are making money like $30, $50, $80, $100. The ultimate goal of this webinar program is we want to guide you to earn some passive income, or just some guidance where you're learning at the same time you're earning money from the market and the course content. And another 4th and 5th, which I'm not sharing for this session because it's public, where I'll be sharing an Inspire Me Price Action Group, where I'll be sharing one student's success of the week where they make money, and then I'll be sharing that. And the 4th one is the comparison of last week's update and this week. Okay, guys, whatever happened this week was amazing. Last week, it was the fastest stock market crash ever in history. And those who have watched, hold on, yeah. That was the fastest stock market crash, and if you see currently, like Euro USD was going up, and the reason is European stocks rally on the hopes of stimulus measures to lessen coronavirus impact. Guys, this news by right, it should weaken the euro because they're going to print more money. Print more money means stock market will appreciate, and the stock market appreciation currency should weaken, and Euro USD should go down. But whatever happening in the marketplace is totally opposite. And besides that, and gold rises close to 1% as a virus risk boosts rate cut hopes. And if we see Chinese stock surge beyond 3% despite factory activity plunging below expectation, oil comes off low as hope of OPEC cut stimulus counter virus loop. So this coronavirus impact is creating so much of fear across the world, where everyone is cashing out, and literally stock market is crashing and same time currencies are weakening. So this is a very unique experience where, including myself, it's the first time I've experienced this kind of a non-correlation in an extreme over all the past. That doesn't mean if you're a trader who are trading across all the instrument, then you feel the impact. If you're only trading currency, probably for you, like just price move up and down, like kind of thing. And if you see yen euro gain on dollar as market bet, Fed will cut rates this month. So, and if you see Dow Jones, this was a very high impact. And if you see earlier, since 2013 or even earlier, the price drop was not so steep. And there was another drop over here. From 26,000, it dropped to 21,300. That's close to 5,000 points. But what happened this time? From 29,600, it dropped to 24,700, literally 5,000 points, solid 5,000 points, which never happened in the history. And I see the price have as still. People are buying. Already start buying. Let me show you. A lot of traders already start buying Dow Jones because massive drop, and every time it drop, a lot of buyers are accumulating it. So what I see on these stocks, Dow Jones, earlier this was the base. They broke the base. Can you see they broke the base? They broke the base, and there was a sign of buyers absorbing the orders. And if you see on this case, this was the base, and there's no sign of orders being absorbed. And I'm anticipating another price drop. I want the market to absorb the orders, or you can take a risk of buying here, not at current price, probably another drop down, you can start accumulating Dow Jones. So those who are trading this instrument, you can go into that instrument. And in fact, if you see another slide that which I want to share with you guys. Last week, Apple have lost almost $263 billion in value. Now let's see Apple. Apple, yeah. So is it good time to buy Apple stocks? Wow, look at the Apple stocks charts. Hold on, chart, interactive chart. If you guys have any questions, you can do. You can ask. Okay. Look at the drop. This is a weekly chart. Last week alone, the price from actually from $300, it dropped to $250, and there was a massive drop. And guys, you can see, you see, this is what I say, the orders being absorbed, where a lot of buyers are buying the drop because they feel that this is a good price to position themselves. So every time there's a crash, it's an opportunity for us to go in. And earlier, this was happened to be a resistance, and buyers already start buying at this level. And if you ask me, and if you happen to have some extra cash to buy, you can start accumulating the stocks. Every time there's a crash, a lot of buyers are accumulating it. And this is a good opportunity, and that was for Apple. And Microsoft have lost $232 billion. Let's look at the Microsoft. Oh, sorry, Microsoft. Okay. Okay, let's look at Microsoft. I think the market is absorbing, and orders are being wow. Look at the market. Wow, it's overall Microsoft is having so much of buyback over here. The price dropped from almost $188 to $150. That's like 20%, 15% of the drop, and price is rebounding. And I think it's not the this is just first sign that buyers are buying. I do see a more downside exposure. Literally, I think we are going into a recession where start accumulating more money. And if you see, I'm just playing the Ray Dalio's video, and what Ray Dalio is saying, the way he diversifies risk is amazing. And when you guys watch and read his book, it's an amazing book. And what Ray Dalio is saying, let me draw with you guys how to manage a risk. Okay. What Ray Dalio is saying, if you have, let's say you have 1,000 USD or 1,000 USD, and you want to invest in many stocks, to diversify the risk, what Ray Dalio is saying is try to create a portfolio. Let's say this portfolio where you invest your $1,000 into 100 stocks, which depreciate 10% or drop in value probably 80%. Probably it could be a penny stock or any other stocks. Like now coronavirus hit badly, Uber, Grab was affected. Any company which is depend on the mobility of people affected badly, and any business which encourage people to be indoor, like a Netflix stocks appreciated because of coronavirus. Let me show you the thought. Netflix. Netflix. Okay, look at Netflix stocks. Since December, there was like a lot of rally and the market really got hit. And after that, the price was not rallying. People are absorbing and the price really spiked up to this level. And suddenly there was a sell-off and the momentum is picking up. So this kind of companies during this crisis time, because coronavirus, a lot of people are watching this, more people are subscribing, staying indoor, that really increases the volume. So there's always correlation in the marketplace. So to have better exposure, I want you guys to look into this kind of stocks and position stuff so that you can benefit from this kind of incidents. And if you see Google lost under 70 billion, Amazon lost under 66 billion, Facebook's 87 billion. Let's look at the Facebook stocks. Facebook. Okay, chart. Look at the drop. So it looks like Facebook having some hard time going above this level. Let me draw the chart. So it looks like Facebook having some resistance at $222, and there's a sign that buyers have bought at this level earlier. And this was the buyers who bought at this level. So the best buy will be, I still see the price can drop to 13150, and then we can see more upside to this level again. So this is my anticipation on the Facebook. So it's just a beginning, and you'll see more to come in the future. Okay. Now, those who is watching this for the first time, if you feel like, hey, Fatima, it's very interesting. How can I learn from Price Action Guru? And if you want to hone this skill, Price Action skill, analyzing this, there's two ways you can benefit. First is Teach Me series. This webinar that you're watching is actually called Teach Me series, where I'll be teaching you for the next 52 weeks, 1 year, 2020. I'll be guiding you every week. It's a 1 hour weekly webinar program. This will give you a great exposure on how Price Action Gurus, traders, trading with extraordinary result. So I'll be covering a lot of topics where there'll be two strategies: how to take a sniper entry, and then how to trade on order flow clearance, money management, psychology, and a lot of practical examples, and how to identify trend, how to trade range market. So there's a lot of a collective, it's a holistic, whole picture. We cover everything. So I feel every trader should benefit from this and must take, because it's a learning and earning. I'll be giving 2 analyses every week. You can trade this and be profitable. And if you feel like 52 is too long, can I get it short, short period? Then we do have a personal coaching program for those who seriously want to be full-time or active in trading. If you can allocate 12 to 24 months to build a skill for yourself, then this program is for you. There's no such thing that after you attend the personal coaching, within 8 weeks, you become a full-time trader. That's bullshit. So it takes 12 to 24 months to practice. It's a personalized coaching on a live account where participants learn how to master the psychology and trading model so that they can consistently withdraw money from the market. Each participant will experience minimum 100% gain on the live account, where you'll be learning how to turn your $100 to 200 USD from the market. Okay, so let me check. Can you guys hear my voice? Those who are, can you reply? Comment. Yes, good. How about on Facebook? Those are how to trade Apple shares is a different platform. Okay, you got to use different platform, bro. Okay. Yep. Okay. Facebook, everything is good. So let's see this week's opportunity. If you see Euro USD, what I see is European stocks rally on hopes of stimulus measures to lessen coronavirus impact. Guys, European stock market is rising and currency should drop. But what's happening is European stocks is rising, currency also appreciating. So this is a temporary, there's no correlation. And what I'm anticipating is the price is rallying very impulsively to this territory, and I see that price will have a resistance at this level because 1.11694 and 1.11985. If you guys can trade, you can take a position at this level. This is almost a risk reward 1 to 4 trade, where if you risk $1, you have a potential of earning $4. So please look into this Euro USD. And the second opportunity that I'm looking is oil comes off lows as a hope of OPEC cut stimulus counter virus group. So oil already reached at the bottom, and surely there'll be some measurement taken, and you can actually place a position or buy trade at this level, and even the price drop lower, I'll be accumulating oil because this resources has a value and it has a potential to spike up because it's quite new low, and try to have some bullets, your bullets dry so that you can buy more. So these are the opportunities for this week, oil and USD and Euro USD to go short and go long on oil USD. So I'm still expecting another ranging at this level so that I can place my buy positions. And let's jump into today's session. How to trade in a range market. Those who have subscribed to the webinar program, and today I'm sharing this in the Facebook so that, range market, 70% of the time market is ranging. So how to trade this effectively? So those who are subscribed to our program, can you comment what's your way of trading range market? Meanwhile, you guys commenting, let me get some water for myself, just 30 seconds. I'm back. So how you guys trade a range market? Trade between support and resistance line. Okay, good. Okay, now let's see what's the common perception a lot of traders have in the market. I just took this from internet. I don't know from which website. Commonly, like Devash mentioned that trade between support resistance, and a lot of traders mark this as a support. So they say buy at this point, and for sell, if they see opportunity, they will start selling here, sell here, sell here. So generally, a lot of traders, the internet, they teach this for free, and in fact, you see another one more. They say this is resistance, sell here, and place a stop loss at this level. Buy here, and place a stop loss below this. So what is the drawback on this system is, if you trade on this, surely you'll be losing money, because range market is totally a different way of trading. And if you trade like this, probably out of by the time you see everything's perfect, support resistant, and when you take a trade, probably you might be placing a pending sell order here. So you mark that pending sell order. Once you place a pending sell order, market will reach here and take your order, will advance further. So once you take a trade and once you close your trade, the price will really drop. Okay, let me show you another example. It's this was the resistance. Can you see earlier? Oh, in fact, this was resistance. What the market have done is they went all the way up, wipe off all the seller stop loss, and then rally down. But when they show you examples, they will show examples which already happened, which they say, this is a common sell area, this is a common buy area, and you place your stop loss at this level, and you put your stop loss for sell at this level. This is after the thing happens, but when during the thing place, you cannot see this. So I'm going to share how to trade this support resistance in a safer, better risk reward. And let me show you something. Why a lot of traders don't trade range market first place. Okay. If it's a trending market, moves like this, right? This is what you call trending market. Okay, trending market. So, and a range market will be looks like this. So I'm going to show you a different perspective from risk reward and point of view. Risk reward. Okay, from risk reward point of view, if you say generally a lot of traders will be buying at this market. Okay, a lot of traders will be buying in this market, trending market. So they might be buying at this level. All this is a buy area, buy area, buy area. So what a lot of traders expect when they buy, the price make a dip and then rally up. So usually those who are trading with the trend, they expect a risk reward of minimum 1 to 2 or 1 to 3. So the general trend is uptrend. So those who are trading in a range market will be thinking differently, where they identify a key resistance and support, where they generally find where is the resistance, okay, resistance and support. So once they identify the resistance support, they want to sell at the top and buy at the bottom. So, but the range usually it would not be a clean market where sometimes the market will be here and then the spike will be somewhere here. So generally, to be profitable in this market, you got to sell at this area, but your stop loss should be higher, at least double. That means if you sell here, sell, and okay, let's say you decide to sell here. Okay, the distance between the range and the distance between the stop loss, okay, you should sell here and the distance, let's say 40 pips, and you selling in this area, selling here, okay, selling here, and your stop loss should be minimum 60 to 80 pips. Then only you have a high chance of being profitable, because trading in a range, probably it triggered many times. Just digest the concept. I'm going to show you some example where it will be triggering your orders many times, and you may not earn the 40 pips. Your target should be minimum 20 pips to the center. So your target should be minimum 20 pips. 20 pips. So the risk reward is no more 1 to 2, it's actually 3 to 1 or 4 to 1 or maybe 2 to 1. So this is the concept between a range market and a trending market. So why a lot of traders suggest to trade on a trending market, because it's a good risk reward where every $1 you risk, you actually make $2, $3. Even when you're losing, overall, generally you're losing, you're still in a profitable quadrant. Whereas in range market, you might be making a lot of money, but one single loss can wipe off your entire thing. So this is the concept behind that. Just want to share with you. So those who don't know what's the difference between range market and trending market. Now, so how to trade in a range market? So if you see our range market, I want you guys to identify 3 elements in the range market. First is the core. Take the average price ranging. Okay, let me mark that. Step 1. Yeah, 3. That means your stop loss is 30 pips. Davish, I've asked 3 to 1 risk reward. Is it correct? Yes. And this is because the stop loss is 30 pips and take profit is 10 pips. Okay. Step one, identify the core price level. Where is the price is ranging most of the time. So this is the core price level. Then identify the average week, like most of the time at this kind of a turning point. Let me mark all this. You will see some kind of a rejection, a pin bar kind of like that, like this, like this, like this. Okay. So step 2, what I want you guys to do is step 2, mark the average week level. Average week level. Okay. So let me mark the average week level, which is most of the week is being at this territory. So just mark this, and this is second step. And third, mark the step 3. Mark the extreme price. Mark the extreme price of the week. Okay, so which is this one. The extreme price is this one. Extreme price is this one. Okay. Now, generally, a lot of traders teach or trade. You sell at the resistance over here and put your stop loss. They teach generally put the stop loss above the extreme price. So what will place normally, what will take place is at the extreme price they will do a price might go even higher, wipe off your stop loss and then trade. So what I'm sharing with you guys, like earlier example, you must start, you've identified a call, start to place a trade at this level. And your TP should be, if this is, okay, let me mark the thing for you. If this is 80 pips, if this is the 80 pips, to the center is 40 pips, and your stop loss should be at least double or triple, should be at least under 20 to 80 pips. So it's not so risk reward better, but you'll be getting many times the entries. The frequency of you making money will be a lot, but the risk exposure is that. So a lot of people think it's okay for me to absorb this because if it's ranging for 20 times, I'll be making 19 times and I'll lose one time. So I actually can make 19 times and still overall be profitable. This is how you manage the trade and how you handle the thing. So any questions, guys, so far? Okay, let's look into some example in MT4. Wow, look at Euro USD, like I mentioned. The price is heading towards this level. Now look at how am I trading on this range market. Overall, it's a range market, but the range starts from here. Okay, there's one range market over here. Today, most likely my trade will trigger. This is the core price. Okay, let me. I open a new Euro USD chart so that I can see. On a daily chart, a core price is somewhere at this level.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Okay.
Server.
And if you
server.
find the extreme price,
maksudnya you dah ping server ni
this level,
dan ping server ni dia dah
these are the levels.
Trigger dekat you punya otak dan you punya otak decode benda lah ni, dia transmit dan receive. Bila dia decode, tiba-tiba dia keluar. Oh, pernah tak dapat tu? That moment. Oh, yes. Oh.
So what the market have done?
Oh, moment.
So we go to
20 millisecond ke berapa millisecond ke that moment. Kau tengah lukis ataupun kau tengok assignment orang lain. You tengok orang lain lukis,
and I've taken a trade. Sorry, I've placed a pending order. I want the price to come here, trigger, and drop
easy rajin
the
lukis dia
center of the range
setup
market. I should be able to
pembaris tu saya tengok je dia lukis. Sekali ada saya ada dapat satu moment ataupun saya cakap, masa ni boleh masuk juga, tak payah tunggu dia buat lower, masuk je dekat sini. Memang betul.
Stop loss
dia ada atau moment ataupun.
Okay, let's see. Since we are looking at since this one is targeting about 100 pips, and the stop loss should be minimum 300 pips. So if you can trade in a range market, this is how you should take a trade. And this is one good example. And how many more pips to hit our trade for 40 pips? Okay, that's good. And let's look at the oil. Dollar CAD. Okay, let's look at dollar CAD. Dollar CAD. Wait, I'll put a new one, new chart. Great. Okay, look at this is good example. Now, let's look at a bigger picture. Overall, if I categorize this market as a range, price range, I mean, it's trending and then it was ranging in this area. This is the core price. And this is the extreme price, this extreme price, 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 extreme, 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 extreme. So the average extreme price is somewhere here. Somewhere here. Somewhere here. So what you can do is there's a lot of extreme price at this level also. So what I can anticipate for dollar CAD is price can come to this level and drop to the center, but you must place at least triple of the distance, where from year to year it's about 300 pips. Your stop loss should be 900. Now this is how you trade on daily chart with a proper risk reward things. Yes, bro. Devash, yeah, if you want to trade stop loss 300 pips, then that's the capital you need. But can you trade in a 5 minutes? Yes, you can. Let me show you this one. But you must know overall trend of the day is which direction, you see. Okay, this was a range call. So what generally the traders will be doing is they sell here, 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 sell here. So when they go wrong one time, probably hit their sell here, the exit, but they actually made, okay, let's say let's calculate that 3 times stop loss. From year to year, it's about 40 pips, 20 pips. 1, 2, 3, 4, 5, 6, 7. 7 times you make 20 pips, and one single loss, you lose 60 pips. So overall in a profit, did you understand? So like what I'm saying is, if at all you traded on this first attempt, second attempt, third attempt, 4, 5, 6, 7 attempt, every time you trade 7 trades, 20 pips gain is 140 pips. And your stop loss is 3 times, so it's about 60 pips loss. 60 pips loss. Overall, you actually make on a net of 80 pips. So this is how you should trade the range market. And let's see another one more example. Euro yen. Wow. Let's see gold. I think gold will be a good example. Gold is actually a trending market. It's not ranging at all. So you cannot apply that on gold. On a bigger picture, still a lot of traders see this as a good rejection area, gold. And what I'm anticipating on gold, another spike up is possible. Gold is still bullish. I do see the upside exposure is there. So those who are watching this, try not to go against gold, because with the uncertainties in the marketplace, gold is a safe haven. A lot of traders will be holding gold as a reserve, okay, and okay. So this is how you trade range market. And any examples, any particular chart that you guys want me to discuss? Okay, you can just comment on the chat box. I'll analyze for you guys. GG. Any chart? Wow, let's look at GG. GBP, Euro, Yen. Okay, sure. GBP Yen have dropped almost 600 pips. And I still see the price as so much of downside exposure. Wow. Okay, Euro Yen. Euro Yen, Euro Yen. Euro Yen. Oh, what pair is this? CAD CHF is bleeding. CHF is a safe haven. Well, I'll come to Euro Yen shortly, but look at this pair. Wow. This is a very good range market trading. It's, if you're trading on if you see this as a call, and this is the base, this is the base, this is the base, this is the extreme price, the market is wiping off everyone. So it's actually a good area to buy now, but you must have a risk reward of 3-1 so that you can take the reversal and bang on the market because it's a range market. Okay, and I think Arvinder asked for Euro Yen. Euro Yen, yes. It's a very good range market. That's a very good range market in this area. Okay, let me mark the average price. The average call price is somewhere at this level. And the extreme buy price would be somewhere here. Somewhere here. There's a bias here. Bias here. And extreme seller's point is somewhere here. Okay. So if you ask me to buy or sell this pair, probably this is a good area to buy again. And your stop loss should be triple of the area. And if you ask me to go short, probably I'll be selling somewhere at this area and triple the stop loss. So even the price move like this and come back to the same center, you should exit. So I'm not asking you to set a TP at the top price. You must be able to exit at the center and then re-enter again and again. So that's how the range market trading should be going on. Any questions, GBP Audi? Okay, GBP Audi, let's look into GBP Audi. GBP Audi. GBP Audi. I can't see GBP. It's here. Wow. Okay, look at GBP Audi. Is it pending or ranging? Guys, is it ranging or trending? GBP Audi? Can you comment? Sylvie, you asked me to check GBP Audi trending. Some say trending. How about others? Does everyone agree it's a trending? Trending. Okay. Now look at the market. Why a lot of people see trending? Because the highs getting higher. At the same time, the lows also getting higher. But for the first time, the high, it's unable to create a new high. And there's actually a small trend line is taking place here for more buyers are buying. So what I see is the price is about to go into range. So if at all I want to trade this market, the average, the call price, I would consider it's still skewed towards the uptrend. And if I want to see the call price over here, okay, for trading, this is the call price. And the average range market is, range price is somewhere here. Average is here. Okay. And if you want to buy, you actually can buy somewhere here. Somewhere. And if you buy at this level, let's say you buy at this level, your SL should be triple of the area. Let's say your stop loss is 100 pips. I'm just giving you a figure. Your TP should be 30. So this is how you should trade this pair. And that's on a trending market. But since it's broke this thing, there's more possibilities for the price to I would say that let the price hit the bottom here, then you can start buy with a stop loss 3 to 1. So this is not so effective strategy to trade because a lot of novice traders, if you have proper money management, then you should be able to profitable in this range market. Any other pairs that you guys want me to discuss? Australia dollar is bleeding lower, and this is let me see, this is the call, and the extreme price is over here. This one, extreme price. So the price over here. So generally, there's a lot of buyers already start buying Australian dollar because it's going cheaper and cheaper. So the TP should be somewhere to the center, but their risk reward is stop loss is like, let's see, how many pips is that? The average TP is, wow, this is crazy. This weekly chart, weekly chart. Even those who place this as a call, a lot of the buyers are buying. There will be a pullback, a correction towards the center here. So you can take advantage on that also. Dollars, Swiss franc, any opportunity? Okay, let's see, Mr. Vimo. What is going on now? What is going on? That's a very good range market, bro. Thanks for identifying that. See, this is a very good range market. Okay, I think this is a very good range market. This is the call. The price is there, and the extreme price, average extreme price, somewhere in the yellow zone. Okay, very good price where you can buy at this level. Okay, if you ask me, bro, I would be buying at this territory at the yellow zone area. So I want the price to drop a little bit lower. Then I will set my TP somewhere here. Center 98. So the buy price should be somewhere 94. So about 350 pips range where it's a good buy opportunity where you can start buying. But if your TP itself it's 300 pips, your stop loss should be how much, bro? To be safe in this trade. Can anyone comment? If your TP is 300, how much your stop loss should be? 700 to 800. Yeah. So this is how range market. You must decide: is it worth trading this? And in range market. But if you guys are working, let's say a working adult, you put a $5,000, $10,000 capital, where you just want to focus many trade. You just want to focus one single trade. Simply, you can buy and put your stop loss 1,000 pips. It would not trigger at all. So it moved 200, 300 pips, you close your trade. So you can trade like that. That's a very good idiot-proof strategy where a lot of traders use in the beginning stage. But what happens is during a crisis time, price can go like, you cannot do this in the GBP yet because the volatility is high. So do not do this in the high volatile pair. Okay, so those who are just came to the webinar program of Facebook. So I just want to share with you guys, those who are my price session students, you'll be having a webinar program and personal coaching. Those who wants to inquire more, you can actually comment on the Facebook page, Facebook link that you're watching. Just comment. We'll be happy to help you guys. Okay, so any questions, guys, so far? Do not use what's in the most of the Facebook. They teach us the resistance, support, and sell here, put your stop loss above here. It will do a stop loss hunting for sure. And just a recap for this week opportunity, I'm looking to go short on the euro. And let's look at the euro. Wow, look at that pair. See? My pending order is somewhere here. The market is, it's just, there was so much rejection there. Most likely the price may not go there. Or it's 20 pips again. It has high chance, but I just missed by how many pips? 20 pips. It's okay. So I want to sell at the best price. If not, it's okay not to trigger the orders. So literally this is the average price, and I just place it. Okay, perfectly. Let's place it perfectly at this level. So guys, I want to ask this. If this is the call and the center is somewhere here, and this area is 140 pips, how much should my stop loss? The take profit is 150 pips. So stop loss should be minimum 450 at this level. So is it worth? I mean, I want you guys, I'm just placing the orders so that I can show you the live proof of how to trade on the range market. And if you just want to take a trade and leave it running, don't want to look into the pair, then this is a very good opportunity. Okay, maybe I want to place one order here. And my stop loss, okay, just to show you guys, I want to place the stop loss at 1.6 over here. Okay, this is one of the trade that we took. So any questions, guys? Those who have any questions, please ask. Any questions? No questions? How you calculate a sell again? Okay. Bro, it's 3 to 1. For range market, if your stop loss, if you take profit is the center 150 pips. Since this one is 150 pips from the current price, so I triple the stop loss, at least 450 pips to this level. So since it's a daily chart, it might take another couple of weeks to hit our TP. Look at the price movement. Look at this. So this is 1 minute, so that you can see a more volatile movement over here. So it still has the possibilities to spike up. It's just 1 minute reaction. So a lot of orders are being placed at this level. So we can expect price to reach here and drop again. Okay. So that's all for this week. And any questions, guys, besides that? Any questions? If there's no questions, I'll end the sessions here. And thank you. Next week, I'll be going into the order flow clearance, which is the core strategy. Why this week I shared about the market crash, because this is what last week happened. It's more relevant to speak about this week than next week. So next week, I'll be covering on order flow clearance. For next 4 sessions, will be continuously order flow clearance. And I'll be sharing you guys more into the strategies. So bye-bye, take care, safe trade, and see you guys next week.